Okay, let's talk about something that, on paper, makes absolutely no sense. On February 4th, 2026, Eli Lilly pulled off a move that should have been a disaster. Right after agreeing to a massive government deal to slash prices on their biggest drugs, their stock didn't just tank, it surged. So, how on earth does a company convince Wall Street that cutting prices is a great idea? Well, that's the puzzle we're going to solve right now.
So here's how we're going to crack this thing open. First, we'll tackle that central paradox head-on. Then, we're going to dig into the incredible financial numbers that Wall Street was actually paying attention to. We'll also uncover a really critical signal by pitting Lilly against its biggest competitor. Lay out the optimistic bull case versus the cautious bear case. And then finally, boil it all down into one clear takeaway for you.
And this is the moment things got crazy. The day Lilly dropped its earnings report, the stock just shot up, over 9%. Investors weren't just happy, they were thrilled. And just to be clear, this happened after the news broke that they'd be cutting prices by more than 65% on their star drugs. Wild. So yeah, this brings us right to the core question of this whole thing. It just feels backward, right? Normally, you hear deep price cuts, you expect the stock to take a nosedive. So what in the world did the market see that day that turned a potential catastrophe into a huge celebration? Well, the answer isn't in the headline. It's buried in the numbers. To really get why the market reacted this way, you have to look right past those price cuts and see the raw financial muscle that Lilly flexed in their earnings report. The whole story really comes down to three key numbers, what I like to call the big three. First up, revenue. And wow, we're talking $19.3 billion for the fourth quarter. That is a 43% explosion from the year before. Now, to put that into perspective, Wall Street was hoping for maybe $18 billion. Lilly didn't just beat that number, they absolutely smashed it.
Second, let's talk about profits. Earnings per share came in at $7.54. That beat the forecasts by almost 9%. Now, this is crucial. It's not just about selling more stuff. It proves they're running an incredibly efficient operation. They're getting more profitable even as they're growing at this insane speed. And third, the outlook for the future. For the year ahead, Lilly said they expect to bring in somewhere between $80 and $83 billion. This wasn't just a forecast. This was a massive statement of confidence. This was them telling the market, you think that was good? We're just getting warmed up. And this chart right here really puts their confidence into perspective. You see that first bar? That's the analyst consensus, what all the Wall Street experts thought was a pretty good target, around $78 billion. Lilly's own forecast was a full $3.5 billion higher at the midpoint. That gap, that sent a huge signal to investors. But believe it or not, that wasn't even the most important signal of the day. Because the full story here isn't just about how strong Lilly is. It's also about how its main rival, Novo Nordisk, suddenly looked vulnerable. You see, on the very same day, the market was also processing news from them, and the difference between the two was just night and day. Now, this is what I call the great divergence. I mean, just look at this. On one side, you have Lilly forecasting up to 25% revenue growth. On the other, you have its rival, Novo Nordisk, warning of a potential 13% revenue decline. You have two giants in the exact same market, facing pretty much the same pressures, but they're heading in completely opposite directions. This was the hidden signal that savvy investors jumped all over. So you've got to ask, why? How can this be happening? Well, it boils down to two big things: manufacturing and patents. Lilly has been sinking billions into building out its manufacturing here in the US, creating this huge competitive moat. Meanwhile, Novo is staring down the barrel of some critical patent expirations on its main drug overseas. Simply put, Lilly has built a machine for a high-volume game, and Novo is suddenly finding it very hard to keep pace. Okay, so this clear split between the two rivals really sets the stage for two very different futures for Eli Lilly. So let's break down this super optimistic bull case versus the more cautious bear case that you can build from all this information. The bull case is pretty simple. The volume engine is just starting to roar. The idea is that the sheer number of new patients is going to be so massive that those price cuts will barely even matter. You've got new Medicare access opening up a gigantic pool of patients on July 1st. Then you've got the launch of their new pill, Orforglipron, which will attract a whole new group of people. With over 60% of the market already, the bulls believe Lilly is set to just dominate. But the bear case sees this whole thing as a high-wire act. The big question is, can volume really make up for such deep price cuts? I mean, that's a lot of pills to sell. Plus, this massive manufacturing expansion and new drug launch has to be executed perfectly.
No room for error. And let's not forget, while they're on top now, this market is brutally competitive, and the company is almost totally dependent on this one class of drugs. Any misstep could be a big one.
So, after weighing the paradox, the insane financials, and these two opposing bull and bear arguments, what's the final verdict here? Let's distill all of this down to the one thing you really need to understand.
You know, this quote from the CEO, Dave Ricks, he basically lays out the entire playbook right here. It's not about fighting to keep prices high. It's about using their massive manufacturing advantage to get their medicine to millions and millions of new patients. They don't see the government deal as a threat. They see it as the key that unlocks a much, much bigger market.
So, the crucial point is this. Eli Lilly is not playing a pricing game, it's playing a volume game. The market's incredible reaction wasn't in spite of the price cuts, it was because of what those price cuts represented. By trading lower prices for massive market access and just flat out outbuilding its rivals, Lilly is making a colossal bet that it can industrialize metabolic healthcare. And on that day, Wall Street decided that was a bet worth taking.